If you only looked at the stock chart, you'd think the AI boom is over. NVIDIA is down, sentiment is ugly, and big names like SoftBank and Peter Thiel have been selling. But behind the scenes, hyperscalers are quietly signing up for hundreds of billions of dollars in GPU orders, and AI data center spending is actually accelerating. In this video, we're going to break down what NVIDIA's earnings really mean for the entire AI market. Is this an AI bubble or the greatest sale in the early stages of a 10-year build-out? What should you watch in NVIDIA's earnings line by line? And what do new AI labs from Jeff Bezos and Microsoft tell us about demand over the next few years? Stick around to the end, and I'll give you my personal bull versus bear checklist you can use on any AI stock, not just NVIDIA. Let's start with the obvious. AI stock prices have cooled off. NVIDIA had a monster run, and now we're in a period where every small headline turns into the AI bubble is bursting. But when I look at the underlying business, the story looks very different. Last quarter, NVIDIA reported around $46 to $47 billion in revenue, with data center sales over $40 billion and gross margins back in the low 70s. That ugly quarter where margins dropped to about 60%, that was mainly one-time write-offs related to U.S. export restrictions to China, not a permanent collapse in profitability. Management has been very clear. They still expect mid-70s% gross margins once the Blackwell ramp and China adjustments normalize. So the earnings power of NVIDIA is still there. What changed is sentiment. When a stock runs hundreds of percent in a short time, any slowdown, any insider sale, any bearish tweet can spark fear. But investing in a megatrend like AI is about following cash and capex, not Twitter sentiment. So what does follow the money mean in AI right now? Across the big players, Microsoft, Amazon, Google, Meta, Oracle, plus AI clouds like CoreWeave, data center, and AI capex have gone from tens of billions per quarter to well over $100 billion per quarter and keep climbing. Independent research firms estimate that over the next couple of years, big tech alone could spend hundreds of billions of dollars on AI data centers, chips, and networking. And that's before you include sovereign AI projects and specialized AI clouds. Jensen Huang has said NVIDIA has around $500 billion in cumulative orders for its Blackwell and next-gen Rubin GPUs through 2026. Wall Street originally underestimated that number. This pipeline is larger and longer dated than most models had baked in. So while the market is asking, is AI over? The customers are literally signing contracts for $500 billion of compute over the next couple of years. That's not what the end of a trend looks like. That's what the infrastructure build-out phase looks like. Now let's talk about the earnings NVIDIA is about to report, because this is where the market will decide the next move for AI stocks. There are 4 numbers I'm watching more than anything else. Number 1, total revenue versus guidance. NVIDIA guided for roughly $54 billion in revenue for this quarter, plus or minus a couple of percent. Analysts are a bit more optimistic and are looking for something closer to the mid-50s billions. If NVIDIA lands near the top end of its guidance, or even above consensus, that's a strong signal that AI demand is still running ahead of expectations. Number 2, data center revenue. Data center is the core AI engine. Last quarter, it was around $41 billion. For this quarter, expectations are roughly $48 billion, maybe more if Blackwell ramps faster. If you see data center coming in above those levels, it tells you hyperscalers are still ordering aggressively, despite all the talk of optimization or slowing AI. Number 3, gross margins. Remember that weird 60% margin quarter? That was mostly due to inventory write-downs for China-restricted chips. NVIDIA's normal margin profile is in the low to mid-70s% range, and that's exactly where they've guided. Around 73% gross margin for this quarter, and a path back to mid-70s as Blackwell and Rubin scale and the China situation stabilizes. If margins hold or expand from here, it confirms NVIDIA still has pricing power and isn't being forced into a price war. Number 4, Q4 guidance. This is the big one. The street is expecting around $61 to $62 billion in revenue for next quarter. The bull case is NVIDIA guiding closer to $63 to $64 billion, especially if data center guidance hits the mid to high 50 billions. If NVIDIA beats this quarter and then raises guidance into that mid-60s range, That would be a beat and raise that could reset the entire AI sentiment, not just for NVIDIA, but for AMD, Broadcom, Arista, Vertiv, and many other AI infrastructure plays. If they only guide in line or talk about any demand weakness, that's when the bubble narrative can really gain momentum. NVIDIA isn't just selling chips. It's building a full ecosystem moat around AI infrastructure. One of the biggest under-the-radar moves is NVLink fusion with ARM Neoverse. Here's why that matters. Hyperscalers like AWS, Google, Microsoft, Oracle, and Meta are all building their own ARM-based CPUs. With NVLink fusion, those custom CPUs can plug directly into NVIDIA's Blackwell and Rubin GPUs over a high-speed interconnect, instead of being limited by traditional PCIe bottlenecks. That means NVIDIA can license the fabric and sell more GPUs and networking gear, even when customers design their own chips. Instead of fighting custom silicon, NVIDIA is effectively saying, go ahead, build your own CPUs. Just connect them to our GPUs and our networking fabric. On top of that, we're seeing a new wave of AI labs. Jeff Bezos is backing a new AI startup, often called Project Prometheus, with over $6 billion in funding and a focus on AI for the physical economy, manufacturing, aerospace, logistics, and more. That's a brand new multi-billion-dollar AI customer being born. Microsoft is building its own model family, projects like MAI-1 and its superintelligence team, on top of its massive investment in OpenAI. Microsoft is signaling that it wants more independence, which means even more internal AI R&D and more demand for GPUs and AI infrastructure. NVIDIA, Microsoft, and Anthropic have also announced multi-billion-dollar commitments that include Anthropic buying huge future chunks of NVIDIA compute, while Microsoft pours more money into AI cloud capacity. All of this points in the same direction. The number of deep-pocketed AI buyers is increasing, not decreasing. So is this an AI bubble or a massive, noisy, early-stage build-out? Here's the framework I'm using going into NVIDIA earnings. First, the bull case. What would make me more confident? Q3. Revenue and data center both beat the top of guidance and consensus. Margins. Gross margin holds above roughly 73%, and management reiterates mid-70s by year-end. Q4. Guidance moves towards $63 to $64 billion with strong data center commentary. Clear confirmation that the $500 billion Blackwell and Rubin order book is intact and maybe even growing. Strong comments on enterprise AI and sovereign AI adoption, not just hyperscalers. If we get most of that, it tells me the AI build-out is ahead of the street and the current sell-off is mainly sentiment and valuation, not fundamentals. Now the bear case. What would make me cautious? NVIDIA only delivers a small beat or just in line. Q4 guidance stays around $61 to $62 billion or below. Any hint that hyperscalers are slowing GPU purchases beyond normal digestion. Margins start compressing again in a way that can't be explained by one-time write-offs. That doesn't mean AI is dead, but it would mean that expectations got too far ahead of reality, and we might need more time for earnings to grow into current valuations. For me, the most important thing is this. Stock prices can fall 20, 30, even 40% while the actual demand curve keeps going up and to the right. Right now, the capex, the order book, and the ecosystem moves from Bezos, Microsoft, and others all point to years of AI infrastructure build-out ahead. The real question is not, is AI dead? It's which companies will capture the bulk of that value. If you found this breakdown helpful and want more deep dive AI and semiconductor analysis with real numbers and not just hype, make sure to like this video, subscribe, and turn on all notifications. And let me know in the comments, are you buying NVIDIA on weakness, rotating into other AI names, or sitting this one out? As always, this video is not financial advice. Do your own research, stay rational, and I'll see you in the next one.